you feeling on edge about the protection accorded to your stock trading activities? Does the fast-paced, overwhelming amount of data and information of stock market trading worry you? Let us explain how we can allay these concerns. At Bursa Malaysia, we offer a vibrant and diverse marketplace that provides easy access to a wide variety of investment products, connecting you to a comprehensive capital market ecosystem. Apart from having the most number of listed companies among ASEAN exchanges, we also offer you broad investment opportunities in various other securities and derivatives, amongst others, exchange-traded funds and structured warrants. Looking at this large pool of investment options, you may ask what is being done at Bursa Malaysia to monitor the market, ensuring your investment security. How do we guarantee a safe and secure investment experience for you? Well, this is where the market surveillance team in Bursa Malaysia regulation steps in to ensure that the marketplace is orderly and fair. The team at Market Surveillance comprises dedicated analysts hailing from all corners of the finance and capital market industry, where their expertise is pooled to ensure our markets trade in a vibrant, orderly, and fair manner. And at the backbone of the market surveillance team is an advanced real-time automated surveillance system. This includes a system that powers the surveillance work in more than 50 of the world's largest markets and regulators. A wide range of market misconducts are monitored, from price and volume manipulation to insider trading as well as front-running, amongst others. Alerts triggered real-time by the system get immediate attention from our analysts who use multiple analytical and visualization tools to analyze trading irregularities. Should suspicious trading be found, preemptive actions such as explanation of our observations will be undertaken with the affected brokers, so that swift rectifications can be made to curb escalation of these activities. If the irregular activities are more serious in nature or the errant parties are recalcitrant, an investigation report will be prepared for possible enforcement actions. After a brief understanding as to how market surveillance operates to safeguard the integrity of the marketplace, let us look at what is done to ensure timely disclosures by our listed companies. Quality and timely information that investors receive are crucial in the world of trading, and market surveillance is a big promoter of efficient price discovery. Therefore, in the event a stock shows unexplained large price movements coupled with high trading activities, we will issue an UMA query, short for Unusual Market Activities query, to the affected listed company. The UMA query is a disclosure tool used to prompt the affected company to inform the public of any internal developments which may affect its share price. Given the rise of investment gurus and advisors on social media and chat rooms in the investment circle, surveillance has increased its attention on these forums to monitor their activities. To safeguard your investments, we urge you to be aware of the credentials and reliability of these advisors and obtain investment information from reliable news sources, and also through Bursa Malaysia's website on bursamalaysia.com. Bursa Malaysia has in place strong surveillance capabilities through our advanced surveillance systems, as well as a dedicated team of analysts, so that you are assured of a transparent, secure, and efficient marketplace for your investments.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. The webinar title today is From Analysis to Action, Leveraging Data Analytics in Stock Market Investment. So my name is Shen Chu. I'm the moderator for this session. So in this webinar, we're going to study why data analytics is important and how are we going to use them to make informed investment decisions. Now, disclaimer for this webinar is whatever we share in this session is only for educational purpose. In no way that we give any recommendation for the buy or sell any listed securities that I mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. He graduated with bachelor degree in finance from Coventry University, UK. He's a licensed financial planner. He's also a financial advisor representative license with Bank Negara. So he's a co-founder of eCameron, in which he has shares content of more than 1 million views. He has more than 12 years of experience in investing and has trained more than 1,200 working adults to master the wealth growth strategy in 3 years. So it's none other than Mr. George Poh. George, how are you today?
Hi, Shane, and hi, good evening to everyone. Good day.
All right, fantastic. I will stop sharing my screen and hand over the control to you.
Okay, thank you very much. Let me share my screen, and can everyone see my screen? If you can see it, please type in yes to me, right? Okay. Fantastic day, right? Okay, fantastic. Everyone can see my screen. All right. Good to see some familiar names here, right? Again, yeah. Good to see you all. So, today's my topic is going to share with you about how are we going to leverage on data analytics, in our investment journey. May I know a show of hand of you, how many of you actually do believe that in value investing, in fundamental investment, right? Data analytics is one of the important skills that we must have. Every one of you, do you? If you are agree with me, you type in one, right? If you think nah, oh, okay, I haven't give you the second choice, right? Right. Okay. Thank you very much. Now, I believe every one of you believe that data analytics is very important, right? Because in investment we deal with a lot of numbers. We often deal with the corporate results we deal with the macroeconomics, the CPI, the GDP, and whatnot, right? So these are all the data or informations that we are we're receiving every day, in regards to our investment. So today in my topic, right, I'm actually going to share with you how are we going to learn some of the fundamental data analytic concepts. So I'm going to share with you in fundamental investing, now what are the key data, or key figures that we need to learn, and we need to know how to analyze it. And secondly, we're going to dive deeper into how are we going to interpret all these data insights for a better investment decision. And I'm going to share with you how I'm using all this data to build and refine my own stock portfolio, right? So if you are ready, just let me know you are ready. Just put in ready, right? So we are going to, without I'm not going to talk much. Let's go into our sharing today, right? Let's go into our sharing today, right? Now, first thing first, why data analytics matters, right? May I know, okay? May I know how many of you are a data scientist? Come on. If you are a data scientist, put in me. If you're not, just win no, right? I see. Not many of you are data scientists, right? Oh, we do have data scientists over here. Oh my goodness. Right now, these fella are smarter than me, for sure, right? Because you guys are the data scientists, you deal with data every day, right? Now, in these sessions, right, I'm going to share with you how we start thinking like all these data-driven investors. Now, I believe most of you are not a data scientist like me. Although I study finance, I study investment, but data entry, data analytics is not something that I've been taught to. But good enough, I'm learning investment, during my university time, and I know how exactly are we going to analyze the data and the information that we are receiving, right? So as a investor, we cannot just simply look at the news or some of the figures being published by the listed company, or by the government about the recent economics figures and whatnot. We cannot just simply look at the numbers and then make our decision outright from there. That we cannot just do that, right? So how are we going to, from gut feeling, in our investment, to become a data-driven investor, right? I can show you now. This is a photo of most of the retail investor. Now, I believe those who are the regular guests in our Bursa webinar, I believe you are not the typical retail investor where you struggle with looking at the news headlines, stock tips from your friends, and some emotional reaction to the price swings. Every time you do that, especially I believe early this week, right? Sorry, I think today is what, today is Wednesday. Yes, early this week, we have the news where the Jetrix AI, the formerly known as MyEG, their share prices drop. If you don't really go and study the informations or look at the numbers, right? The emotional reaction when people just dump the price, they dump the shares, and the share prices just drop tremendously, your emotion will react, and then you might want to panic sell all your stock. So now this is the problem with all the retail investors, right? If not all, most of it. But we don't want you to become the kind of people, because if you with a data analytics skill in how to do investment, right? It will empower you to act based on logic, based on the analysis that you've done, right? And but not fear or FOMO compared to other retail investors, right? So why data can make you a better investor, right? Why? Now, think of data like your personal investment compass, right? We use compass, we don't use it these days, right? Because our, Google Maps, our Waze, we have a built-in compass. But just look at your phone, right? We have a compass. And back in the older days, right? Our ancestor, the older generation, 120, 200 years ago, they use compass to what? To guide their directions. Now, data is also like our personal investment compass. You might still choose the destination, but at least you have the compass. You know where is the right directions to go. Now, so why data make you a better investor is because it will help to simplify our investment decision with filters, right? It doesn't simplify our investment decisions by simply looking at the numbers without filters, without analyze it, right? So it will help us to make our investment decision easier. Now, secondly, it will help us to avoid hype-driven or panic-based mistake. Now, as an investor, do you always look back at your mistakes? Do you do that? Right, I do. Right, why? Because I always look back at my investment mistake and I'm trying to learn something out of it. So whenever I look into, back in 7 years ago, 8 years ago, I made some terrible mistake in investment. I have stocks that dropped more than 80%, right? So I look back, why that happened? Why did that happen? So I will study and I know, because of maybe I didn't make enough data analytic on that. I didn't study enough on the companies. And true enough, that's the reason why I made those mistakes, right? And thirdly, if you have studied all the data, right, we can spot those high quality stocks before the others come in. Now, this is the trickier part because most of the investors, they don't like to do analysis. They don't like to do research. So if you do, right, you might be able to spot some of the high quality stocks before others in it. Right? I can also give you an example. Back in I think 4 or 5 years ago, when my team and I we are doing some educational research for our students, right? So we did when we do the education slides, okay, then we look at all our criteria and all that, and we study the stocks. And when we do the studies, right, we find out, this stock, right, a particular stock, I won't name it, right, has the growth perspective and also a stable investment, a value investment element in it. So when we study about it, we feel like, this company is going to rocket. And for us, we feel like this company is going to rocket because it has a good future prospect. The fundamental is also good, right? The company and all that, and the price is not in a high PE. So when we spot that stock, right, all of my team, we actually invested into it. And fast forward 2 or 3 years later, this share price actually went up, doubled, for the stock. So for the company, and the company right now is also doing quite well. But too bad the share price just dropped a little bit. But we took our profit years ago, right? So what I wanted to share with you here is basically, if you know how to study, how to look at data, right, you will be able to spot some stock like my example just now, right? And the number 4, it can help you to focus on what matters, because in investment, don't look at what others are investing, right? Don't look at what others are investing. Look at all the numbers, the trends, where the growth is, and the business fundamentals. So when we have data, right, we just focus on what matters. And last but not least, it will keep our decision consistent over time because data won't lie, right? Data won't lie because if you have a set of criteria of the data you need to analyze, once you have that in place, every time your decision will be very consistent because this is the framework that you have set earlier, right? Now, and when we say why data can make you a better investor, I also would like to say why this matters to you, why we need to be a data-driven investor, and why we need to learn about data analytics today. Because you don't want to analyze all 300 stocks or 1,000 stocks available in Malaysia. You won't want to do that, right? So how are we going to filter them down? Just using a few metrics so that we're able to find out what are the potential stocks, or the sectors, or the industry. Then we can shortlist maybe 10 to 20 stocks for us to do analysis. Wouldn't that be amazing for all of us? We can save a lot of time, right? And secondly, data reduces uncertainty. When I said reduces uncertainty, it gives you small certainty, right? It gives you one. And every investor, we can actually design a simple and repeatable system that work for us, right? Every one of you, and including me, I already have my system that works, right? But for you, how can you design a simple one? Now, today I'm going to share with you, right? And my quote to you, data is not about predictions. So we don't predict data. We study it, we find the patterns. We don't predict it. So it's about decision making with confidence in this data analytic for your investment. All right. Now, moving on. Okay, I have shared about some introductions to you why this is important. Now, next thing I'm going to go together with you on analytics 101 for every one of you. Right. So let me share with you what is data analytics, at the very beginning first, right? So in investing, data analytics helps you to identify undervalued opportunities, like I mentioned just now. And by doing data analytics, we can compare stocks. We can compare companies within the similar industry and sectors objectively. Don't look at the company name, don't look at the bosses, and you say, this company not doing very good. How are you going to compare with that? Just gut feeling, right? So we don't do that. By data analytics, we compare them with data. Then only we know, now this company, the performance is bad, it's not as good as the other competitors. Now we know why this company is lousy while the others in the same industry is good. Because we compare it via data analytics. And by doing data analytics, it also helps us to filter out noises and hype. Now, when we talk about data analytics, let me show you in a graphic. Now, we get the raw data. Now, data like what? Raw facts, some numbers, ratios, trends. Now, these are all the raw data. Now, when we have the raw data, then we going to analytics. So what does analytics mean? It means making sense of all this data that we have collected to spot the opportunities, or is there any risk involved in this data that we have gathered, right? So it's not about for you to become a data scientist like some of our friends here today, right? They are data scientists. It's not about being a data scientist, but just how are we going to learn by processing this raw data into a good decision-making tools for us, right? Now, so there are three types of investment analytics, okay? I'm going to share with you. First thing first is the descriptive investment analytics. Once we have the descriptive, then we go deep into diagnostic, okay? And after that, we go into predictive. Now, these are the three types of investment analytics. Now, what does it mean? In the descriptive analytics, we study what happened. Now, we study what happened with this data. So when you see, for example, let me give you an example. I think this month, right? Our Bank Negara actually lowered down the cut the overnight policy rate, right, or OPR by 25 basis points. When this information happened, when this event happened, the data come out, OPR dropped 0.25%. Now, in the descriptive analytics, we want to study what happened, what really happened, why Bank Negara actually cut rate. Now, that come to the diagnostic part, right? So what happened is actually the event itself, the facts, and then we go down deeper. Why did it happen? Now, why Bank Negara wanted to, cut our interest rate? Why? So we need to find out the root cause, right? And if you remember, a few months ago, our Bank Negara also did cut the SRR, the statutory reserve requirement for the banking sectors, right? They cut it. Why does it happen? No, why they wanted to do that? So they want to release some hot money into the market. Now, this is the main reason. But of course, there are many more concerns when it comes to the Bank Negara or the government doing such, actions to the market. And then after we study why does it happen, right? Then we need to find out what could happen next. Now, this fall under predictive because we want to know with this kind of historical performance that happened, the historical event that happened, what could happen next? Now, this is where the economics will come in, right? The economists, they are people who do all these things. So they will predict. But we don't need to predict the future. We just need to understand what's going on, why it happened, and how can we find the better ways or directions that the market is going to move. These are the things that is important to us, right? And in investment analytics, all right, there are two main categories that I wanted to share with you here today, because this is also part of our investment journey, and this is also part of how I do my investment data analytics, right? So there are two types of investment or two categories of investment data. The first one is financial data. Okay, I have some examples over here. Now, revenue growth, earning per share, price to earnings ratios, and whatnot, right? And the second category is also very important, is economic data, and what we call the macroeconomic data. All right. Now, let me just ask you some questions. How many of you are well versed with these two categories of data, financial data and also economic data? How many of you here are well versed with it? If you're not, just put in not me, right? Just put in not me in the comment below. I want to see how many of you are actually well versed with that. Okay. Some people tell me they are well versed, right? Okay, but not many people, right? Okay, no problem. Today, my job here is to share with you how to do that, right? Okay, now you don't need to memorize all the financial metrics. Okay, I'm listed here because today I'm just going to share with you some very beginner kind of data or ratios for you to remember. That for me is quite good enough, for you to do a basic value investment data analytics. All right. So before I share with you how to do that, what are the metrics that I'm going to share with you today, right? Let me show you my approach. Okay. How I study the market, how I implement or integrate data analytics into my investment research and also my investment portfolio. Now, I always do that by using a top-down approach. Okay. So what does a top-down approach means? We study with the macroeconomic landscape first. So we need to know what is the global economics right now? What is the situation? What is the positioning? And where does Malaysia stand? Our Malaysian investment market, where they stand for us to understand, the market, the macroeconomics landscape. After that, we narrow it down to focus on, the themes and also the sectors that are going to benefit from this macroeconomic or this economic cycle, right? So after we have narrowed it down, then only we screen for high quality stocks. Okay, so it comes from the top to the bottom, and this top-down analysis help me to invest with purpose, because I can align my investment portfolio, okay, or my investment strategy with the market trend. Because you wouldn't want to invest into some sectors that is not favored by our current economic landscape. For example, what do you think is the current macroeconomic cycle? Where are we standing right now? Okay, where are we standing right now? What do you think? Okay, Eugene says tariff situation. Now, tariff situation is the event that happened, right? Okay, loss of American hegemony. But where does the economy stand? Is our economy in a good stand or not very good or bad? Okay, you wouldn't tell me bad because we are not in the recession, right? So it's either good or we are okay, lor. Okay, not good but man-made. Right, thanks, Eugene. Right, so we are right now at the okay situation, right? Now, what does okay means? We cannot just slow growth. Right? What does slow growth mean? Stagnant. Okay lah. We are in okay lah, not bad but also not good, right? But what can we learn from there, and what sectors is going to benefit from there? Now, this is something that we need to do, use a data analytics to learn more, right? Now, let me show you, right? Okay, so in a macroeconomic landscape, right, when we do top-down approach, we mainly need to understand a few things, like what happening in the economy, right? What trends are emerging right now? So, for example, in global economy right now, most of the country, they're cutting rates, right? So when people are cutting rates, we need to know why the people cutting rates, what happened, and from there we try to find out which industries or sectors is going to align with this kind of macro trend. Cutting rates, our inflation is coming down and slowing down, right? What industry is going to align with this kind of macro trends? After that, within the sectors, we're going to look for a fundamentally strong company. Now, this is very simple, approach or the procedure, or for us, how are we going to, from the bigger picture to undervalued stock pick, right? Now, let me just dive deeper into it. Step one, start with the macroeconomic landscape. So we review some key indicators, key economic indicators, and then we identify what are the current economic phases. For example, are we in expansion mode? Are we in slowdown? Are we recovery? Or are we in recessions? Right. So now these are the things that we need to. And I'm not going to go deeper with you, together with you, on the macroeconomic informations, because I have shared this last year. Okay. Almost a year before, right? A year ago. You can look back on YouTube. You can just look for LifeChamp. I believe the date is 7 August 2024. I did share about the macroeconomics. So I shared about the information about these 5 or 6 economic data, and what GDP means, how I'm going to study it, and what does it mean to the economy, what directions the economy is going to. All these 5 economic indicators I've shared during my sharing last year. So if you're interested, please feel free to go back to the YouTube channel, look for LifeChamp. You can type in my name. I believe you still can search it, but the date is 7 August 2024. Right? I hope the live recording is still there, so you will be able to review and watch it back. Right. So this is the step one. Just go with the macroeconomic landscape. Secondly, after we know where the market going, where the macroeconomy is going, then we narrow focus to the winning sectors or the themes. Like, so we look at sector rotation based on the macro cycle. Okay, for example, in market expansion, in economic expansion, they usually favor tech company, tech sector, or consumer discretionary sector, right? And in recessions, it usually favor healthcare industry, utilities industry, and whatnot. Now, these are just an example, because we need to also study what expansion mode we are in, what recession mode we are in, or which recovery mode we are in, right? So, for example, let me give you another example. If a country shows a good GDP growth, What does it mean? Okay, what does it mean when a company show a good GDP growth? It might means our our country's economy is coming back. Our manufacturing might be rebounding, right? So when we get this kind of informations, right, the data, GDP growth, it may link up to our manufacturing expansion because companies are making more money, right? And it will go back to, right, export increase. It will go back to export because manufacturing is good. And Malaysia, for example, in Malaysia, we are export oriented, right? So when our manufacturing is expanded, is expanding, right? You can also foresee our export is going to increase. Look for some data, right? Look for some data. So our export increase. Now, when we know the macro is going to be like this, right? And now we are in step 2. We need to narrow focus to winning sectors. Now, when I show you this kind of data, what do you think the sectors is going to be benefited? Let me know. Okay, with GDP growth, manufacturing expanding, export increase, what kind of, Eugene, thank you very much. Mostly growth and export sectors, but what are the export sectors in Malaysia? Okay, what are the export sectors in Malaysia? I want you to narrow it down to the teams or the sectors, right? E&E, yes, you're right, E&E, semiconductors, glove, right, glove, oil and gas, right, you're right. Now, shippings, logistic, have everyone of you think of logistic? Because when exports increase, logistic also apply, right? Industrial products and services, yes. So these are the sectors. So once you have the right knowledge, okay, with the data I study, this will happen. Then now you know which kind of sectors that you're looking at, right? Smart, you guys are very smart. And after we know that, right, then only we go into the step 3, which is to screen for high quality stocks using the financial data of the company itself, right? So top-down analysis actually help us to align the macro logics, sector strengths, and now we go into the company fundamentals. So for example, this is just an example, guys. Don't bulat or just simply take my numbers and just utilize it. This is just an example to you. All right. So we apply some financial filters towards the stock universe that we gathered. For example, after we study the macroeconomics, after we get the data, the sectors which we are looking at it, in our watch list, right? Then we apply some financial filters. For example, return on equity more than 10%, price to earning ratio less than 20, our net margin have more than 15%, earning per share growth more than 5% for the past 3 years, 5 years, 10 years, right? We apply filters for us to find out who are the leaders in these sectors. And it will make your life easier because once you have filtered it out, you know where to start. Okay, you know where to start, right? So at this moment, is everyone still following me? Okay, everyone still good? Let me get some water. Okay, everyone is good. Okay, good. Now, after that, after this, right, the top-down approach, I'm going to share with you how are we going to interpret financial and economic data for our investment decision. All right. So here are some of the key things that I want to share with you. Because the market will move with these numbers. So I think every one of us, we also need to, at least understand what these numbers are. So first thing first is the overnight policy rate in Malaysia, we call OPR. In general, we call it interest rate. Okay. Interest rate will impact the banks, the REITs, the property stocks, industry as well, right? Because it depends. Interest rate will affect the cost of your financing. Because as a company, we need to get financing from banking institution or financial institution to support our business growth, for the working capital, the capital investment, right? So OPR or interest rate is very important for us, in this sense, right? Secondly, inflation. Okay. By quoting inflation, many people will say, hey, George, what is the economic data that measure inflations, right? So there are two, but one that I mostly use is actually the CPI, okay, the Consumer Price Index, okay? Now, this is very important because it shows that how much, our price has gone up, for the consumers, right? So when we study inflation, we study CPI, it also drive rotation to, when CPI is good, it drives rotation to consumer steppers. No, if the inflation is too high, people will start to switch maybe towards some safe haven in assets, right? So this is very important. And thirdly is the GDP growth by sector, because GDP growth is very important. It's very straightforward. We can just read it in the articles in the news whenever our Department of Statistics Malaysia or the Bank Negara Malaysia, they have released the latest GDP numbers in the past quarters or a year, right? So by looking at GDP growth is not enough, yeah, guys, it's not enough. So we need to study the data further by looking at the GDP growth per sector. So, I think our government do a very good job because we have a Department of Statistics Malaysia. So in Department of Statistics Malaysia, they will tell you which sectors are actually having a highest GDP growth on which are not, right? So this is very important. Then fourthly, we also need to know about the exchange rates, okay, of US dollar to ringgit Malaysia, because this will affect exporters or importers, in our market. So these are the four I would say four market moves that we need to be aware of. And if you understand how these four works, right, I believe you're already ahead of those retail investors, the 70 or 80% of the retail investor in the market. Right now, let me quickly go through in the 5 key financial metrics that matter in stock selections. Do bear with me. These 5 financial metrics are not how I put it this way. Okay, don't only follow these 5, because I just wanted to give you the general financial metrics that people can use in their own investment. All right, but in different industry or different sectors, but which one of the sector I'm going to share later, in different sectors or industry, you might need to look at different financial metrics. This is important because, for example, let's say we are looking at dividend yield, right? Let's say we are looking at dividend yield, and I can tell you, if the company or if the industry, they don't practice giving dividends, maybe they are high growth industry, so they don't prefer give dividend. Instead, they wanted to reinvest all the earnings they have earned, right? All the profit they have earned. Now, so we cannot fit dividend yield into high growth industry. It doesn't work, right? But I just want to share with you, these are the 5 key financial metrics. As a beginner, you should know how to study it, right? So for return on equities, it is about profitability and also the efficiency of how the company utilize the equity portion of the company. Okay, so we always wanted to look for more than 10, at least more than 10, because it means that for every 1 ringgit you have input, for every 10 ringgit you have invested, you will get 1 ringgit. You will get 1 ringgit. Now, secondly is the net profit margin. This is something that I like it the most, because by looking at the profit margin, even is from the gross profit margin towards the profit after tax, or before that, maybe you go into EBITDA, then only go into the net profit margin, right? So it tells us how good the company control their costs. And also it will show that whether this company have the unique selling point, to protect themselves, so that the other competitors cannot simply just move them up. Okay, so if, for example, let me quote you an example, Oriental Copy. Okay, we have these stocks, this company, this just went public this year, right? Early this year. So if you study Oriental Copy, I would ask every one of you, just go over to download their prospectus. If you study their prospectus, for Oriental Copy, you will see that their profit margin is comparably higher. Now, when we talk about net profit, higher than the industry average, higher than the peers, right? So this is very important, because from there we can have an idea that Oriental Copy might be very good in controlling their costs, right? But that is not 100% sure. So that we need to also study other financial metrics, right? And thirdly is the 3-year earning per share growth. I put 3-year but not 5 years is because in 2020 and 2021, we get a bad hit, from COVID-19. So at least look for 3 years that the company is having a momentum, of their earnings growth. So this is very important. And then the number 4 is the price to earning ratio. I believe this is I think this is very easy and simple because I believe every one of you know what is PE ratio. And last but not least is the dividend yield. Okay. So now these are the 5 key financial metrics that we need to learn. Let me just quickly go through with this. So ROE, the percent, how are we going to get how to get the numbers if I take the net profit or net income divided by your shareholders' equities, right? And higher ROE always often means that it has a better capital efficiency compared to their competitors, right? Secondly, PE ratio, I believe you guys are familiar with it. Then net profit margin. Now, net profit margin actually measure the company's ability to convert their sales into their actual profit. Okay, and when you have a higher margin, it means that you have a strong pricing power. Because maybe you are the leaders in your industry. So when we bargain, with our clients, we don't cut our price because we just simply very good. We have the value there, right? So this is how we can maintain a high margin. Low margin, I will just skip it. All right. Now, in terms of margin as well, right? It also depends if the industry is, a traditional industry where their profit margin is very low. There are these kind of companies. So we cannot just simply say, okay, net profit margin, look for 15%, look for 20%. We can't do that because every industry, they have the average numbers, right? But compare with the average is good enough. Okay, good enough. Now, earning per share, very simple. Just take the earnings of the company divided by the shares, right? So you get earning per share growth. Okay, so why we need to look at the growth? Because we wanted to know that this company can do consistent positive growth. If they can do that, it means that their results, their cultures has been built into their business operation. So this is very important, right? Dividend yield, as simple as that, right? Now, when we talk about dividend yield, if you are going to invest into dividend stocks or passive income, now, how many of you like to invest into how many of you like to get passive income through investing in dividend stocks? Okay. All right, a few of you, right? Okay. Now, how are we going to study the dividend yield? Simple. Just look for dividend yield that is higher, than your FD rate. For example, currently our FD, I believe, is somewhere around 3 to 3.5, right? So look for a company that can give you a dividend yield of more than 5%, 6%, 7%, those that you can be very comfortable with. But please don't only look at the dividend yield. Okay, because dividend yield can be tricky sometimes if the company's earnings is dropped. Now, if the earning drops, share price drop, and that's why dividend also drop. But if you only look at the percentage, you might see, they still can maintain about 6 to 7%. But the share price you lost from there will be greater than the dividend you earn, right? So it's not worth it to only look at dividend yield and invest. But yes, we need to also have some passive income element in our investment portfolio. That's why we need to invest in dividend stocks. Anyway, right? Let me tell you something, right? In macro trend, okay, I will just show you the answer here, right? In the macro trend, for example, OPR raising, okay, what does it mean? Okay, what does it mean? And what sectors it is going to benefit, right? Now, let me have some more engagement here. Okay, now, Eugene already got the numbers, right? You guys are very smart. If OPR is raising, what sector is going to be benefited? Okay, I see people say banking, Okay, some say financial. What else? What else? Okay, you guys are very smart. Okay, if OPR racing, okay, banks, okay, insurance companies, right? Okay, if let's say we are in high inflation, what sectors is going to benefit it? Okay, utilities, okay, FMCG, okay, fast moving consumer goods, okay, example, Nestle, Dutch Lady, these kind of companies, right? FMCG. Now, if ringgit is weakening, okay, what are the beneficial sectors? Okay, export companies, glove makers, furniture manufacturers, right? And these are people if ringgit is weakening. Now, last but not least, if the macro trend is showing that we are in the fear of recession, okay, we are not in the recession yet, but we are in fears of recession, that the recession might happen. Okay. Eugene, you're very smart. Okay, Eugene, you're very smart. But let's just talk about sectors first. Okay. Okay. No, hospital, yes, healthcare, REITs, dividend stocks. Okay. Now, I believe now you get what I mean when we talk about top-down approach. Because if you can study the market trend, then you will be able to spot which sectors are important, are benefiting from it. Then from these sectors, then only we go down to learn how to select or filter those stocks. Okay, now this is what I mean, right? Combine the macro and also the financial filters, right? Now, let me give you a case study. Okay, I wanted to give you a case study. This is our Bank Negara make their first OPR cut in nearly 2 years. That means in July. Okay, in July. That means in this month. We're now still in July, right? Yeah, we're still in July today, right? They have made a choice to cut our OPR. So let me ask you, which sectors are going to be benefited from this OPR cut? Name me 2 or 3. Okay, REITs. Okay, many say REITs. Okay. All right. Now we have okay, tax. Okay, real properties, constructions. Okay. All right. You guys are there. Now, if let's say following my framework, my procedure, right? After you have identified the market trend, for example, like this one, I give you the example, right? I will give you the case study here. OPR cut, then you know, REITs is something we can look at, tech companies, properties, constructions, and whatnot, right? Then into the sectors, look for 5 to 10 stocks. You know, how are you going to find these 5 to 10 stocks? Filter, screener, you know, do whatever you can to screen it through so that you get the top 5 or the top 10. After that, research on it. Okay, research on it. Now, next up, we are going to go into the practical screening and comparison using the macro and also financial criteria. That means we study from the macro, then we go into the financial criteria. Now, just now I asked you all, right? OPR cut, you guys give me the sectors. Very well done, right? For those beginners, okay, why they say REITs, why they say real properties, why they say constructions. Okay, now what does OPR cut means? Let me just share with you what does OPR cut means. Firstly, it is a negative for the banks. Okay, why is negative for the banks? Because bank, they earn money from mainly from 2 sources. One is interest income, the second one is fee income. And right now in Malaysia, interest income is still the main contributor to the bank's revenue and also profit. And that's why when OPR cut means their interest rate that they can charge, you know, their net interest margin is going to get some compression. Okay, that's the reason. But when OPR cut, what are the sectors, okay, that will be benefited or positive? Okay, you guys are very smart. REITs, construction, properties, consumer staples, dividend yield stocks. Now, these are very important. Okay, let me go down one by one. Why REITs? Why consumer staples? Why construction properties? Or why dividend stocks? Right. First thing, REITs is because they are leveraging, on financing. Okay, so they have all these assets with them. They ask bank, to finance them. So they need to pay interest. They need to pay installment. Now, when the OPR cut means the interest rate they will be charged after the rate cut, right, will be lower. So by lowering our financing cost, that means for REITs, they will be able to generate more. What do we say? More management income. Okay, for us, this is very important. Okay, so improve our margins. Let's say, for example, construction and properties. Why does OPR cut will improve and positive on that? Okay, why? It's because when OPR cut means our cost of borrowing for individual will get lower, and this is time where you will be able to invest into properties or construction because the installment is going to be lower down, right? Now, with that mindset in your head, right, do you think when the bank cut the OPR rate, people, they will wanted to invest into constructions or to buy properties, okay, because the interest rate is lower? Do you think people will want to buy compared to when our interest rate is at a higher point? Yes or no? Yes or no? Yes, right? So now that's where the property market and also the construction market will get benefited. Okay, now let me move on. So after we know OPR cut is good for REITs, okay, why is good for REITs? Lower borrowing costs, high investor demand for stable dividend income, and also capital gain potential, right? Next up, I'm going to share with you how I'm going to use one of the tools to do screening. Now, once we know the macro, we understand that REITs is one of the sectors. Let me just bring you into a case study on how we screen through it, and then how we find out, the top 5 or 10 watch to put into our watch list. Okay, now I'm using a platform called Share Investor. There's no promotional here. I'm not a marketing guy for them. Just that I'm using them for my screener. Okay, just that I'm using them for my screener. That's it, right? So I'm not going to promote them more. Just to share with you how am I going to do that, right? So first thing first, I select the category, because now I wanted to only filter and screen through REITs in that REITs category. Okay, so over in the category side, select add criteria, select company types, the category to be REITs, real estate investment trust. That's it. Okay, after that you will get a list, of REITs in Malaysia. Now we have about 20 REITs, okay, 20 to 21 REITs in Malaysia. Now, do you want to study all 20 to 21? Okay, you won't want to, because every one of us, we are lazy person. Okay, we are lazy lah, huh? Just admit that we are lazy, so that we don't like to do that. So how? Okay, now we use that to screen it. Okay, so for REITs, what are we looking at? Okay, for REITs, before I show you my criteria, list down to me. Okay, what do you think to screen for REITs? What are the key financial metrics and also the figures that you think is good for me to invest into it? Okay, what do you think? What are the criteria that we need to look at for us to screen the entire REITs? Okay, first thing is dividend yield. Okay, now you just said for net income per square feet. Now, this is not something you can find it in screener. So what do you think so your methods, right, is going to fall when you do the research. But now we just want to filter from 20 stocks maybe into 5 to 7, so that we can go and study it. Okay, dividend yield, yes. PE ratio, I wouldn't care so much about PE ratio, to be honest, for REITs. Okay, for REITs in particular, I'm not that fancy for PE. There's one thing that's even important than PE when we screen REITs. Okay, return on equity. Okay lah, let me share with you. Okay, earning per share growth. their growth for REITs is actually not as fantastic than the high growth company. Okay, now Kok Meng say yes. Okay, PB ratio, price to book ratio. And this is something that we look at. Okay, now let me show you. If let's say we are investing into REITs, they are a dividend type of company, right? So we are looking at dividend yield of for maybe more than 5%. Okay, now this is the number one thing. Then second thing is screen it through the price to book ratio always lower than 1. Okay, because more than 1 means you are actually overvalued, but less than 1 means you are either undervalued or you are fairly priced. So we need to also filter it out. And last but not least, for REITs, because they borrow more. So thank you, Janessa. She mentions the gearing. Now, gearing ratio is also very important when we study REITs, because you won't want your company or the investment that you made into the REITs, they spend a lot on the interest cost and also on borrowings. So we don't want them to overgear, okay, or over leverage. But don't worry. Our mechanism in the capital market, okay, also for income tax purpose lah, they have the sorry, for Bursa point of view, they have the gearing ratio that the REITs company cannot goes beyond. Okay, they have a criteria over there, right? And we set it for below 60%. Okay, below 60%. Now, after that, we screen it through, we get only 7 stocks. From 20 stocks, after we do the filter, do the screening, now we only have 7 stocks. So when we come down to these 7, then we go and study these 7. Okay, so how are we going to study it? We study and analyze based on what industry they are in. Okay, because REITs, we have various type of REITs. We have hospitality REITs where they invest into hotels. Okay, we have shopping mall REITs where they invest into shopping malls, right? Straightforward. We have commercial REITs where they invested their portfolio mostly in commercial business lot. For example, business tower. Okay, for example, the one in UOA REITs, they are a business tower, they are commercial REITs. We also have, you know, some let me think, industrial, okay, REITs where their portfolio is actually in the industrial parks, okay, industrial zone. So now these are different type of industry. So when we do the research, right, and analysis, we need to understand in this kind of a market where OPR cut, economy is not going as expected, we have tariff coming in, what do you think will be a good choice of industry for REITs, you know, at this moment of time? What do you think? What is the most suitable industry? Okay, retail REITs, data center. Okay, so data center fall more towards the industrial REITs, okay, or the commercial REITs. Okay, now I saw one of you said mentioned about retail REITs. I cannot agree more on that, because at this moment of time, when we know our government also wanted to lower down our OPR, also want to reduce our SRR, mainly is because for my point of view, economic point of view, is because our people, okay, they are not willing to spend more money. Okay, they are not willing to spend more money. So for me, retail REITs is not going to be performing very well or as good as others. Okay, for example, office tower, hospitality, healthcare REITs. Okay, we do have healthcare REITs also, guys. So healthcare REITs, they are, you know, their portfolio mainly in hospital. Okay, now, so this is where we analyze it. And secondly, study at the growth prospect of the company and the quality of their assets. Okay, quality of the assets, because you wouldn't want you know, the REITs company they invested, they have a poorly managed shopping malls. You wouldn't want it, because if the mall is poorly managed, right, you won't get a good rental yield, or your rental yield is not going to increase. So that's very important, right? So that's it. Okay, after that, you do your own research. Okay, I won't tell you how to do the research today, but I share with you by using data analytics, we study from the top to the sectors, then to the bottom towards the stocks. Okay, so from 20 stock, now we have about 7 for us to study with, right? So this is very important. Okay, what determine the asset qualities? Okay, for REITs, okay, let me also emphasize on this. On REITs, what determine the asset qualities? I look at a few things. First thing first, I look at the occupancy rates. If let's say they are shopping malls, retail REITs, right? Look at the occupancy rates because you won't want to invest into some malls, they have lower footfall. Okay, and why they have lower footfall? Because they don't have enough shops there, right? So always look for occupancy rate. After that, right, let's also focus on retail rates. Okay, first thing is the occupancy rate. Second thing, where or what is the target audience of this mall? It's very important because we have different REITs. They're also in retail. For example, IGB REITs. Okay, they recently just announced they're going to acquire the Mid Valley JB. If not mistaken, it's JB, right? I can't remember the exact location, but I believe it's in JB. So they are going to acquire that. All right. So yeah, Mid Valley South Key. Thank you very much. Wow, you guys are very smart, huh? Okay, it's called Mid Valley South Key. Where am I? Okay, asset quality, right? We are talking about asset quality. Now, most we have a few also. For example, another company is called Hexstar REIT. So KIP REIT. Okay, KIP REIT. Now, KIP REITs, they also have malls, but their malls is those in the second tier second tier cities or township. So compared to Mid Valley IGP REITs, okay, these are different. So in terms of asset qualities, I would say I look at malls. They have higher footfall, they have higher occupancy rates. For me to determine their asset qualities. Okay, this is very important. Mixed development. Yes, recently because they have injected some of the factories inside, so they have they are kind of from retail towards industrial. Because thanks to their the newest largest shareholder towards KIP REITs. Okay, now let's not discuss over there. Okay. Right, now let us move on into how to define your investment style with the data that we collected. Okay, let me share with you. I have my own dashboard for me to record all the data and make my decision easier. Why did I wanted to build my own dashboard? It's very easy. I used Bloomberg Terminal before. When I was still a banker, I used Bloomberg Terminal, and from there I understand how easier we can get data, because Bloomberg Terminals, they have tons of data, right? Compared to publicly available data that we need to Google search and get from. If you're good in research, you might be able to find more sources. But Bloomberg Terminal have all the things. So from there, I actually gathered a lot of data, back when my time as a banker. So I feel like there's too much of data for me to filter. Then I need a dashboard. I need to know how to filter it out. So I built my own dashboard. Okay. Why? Because I wanted to have a structured thinking, and secondly is because I'm lazy guys. I just don't like to always look at the data and then go and figure it out, or what this data means, how can it link it back. I don't usually do the whole process every time. So what I do is basically I have my own dashboard, so that I just input the data inside. They will let me know and I study the outcome. That's the easier part for me, right? So having a dashboard for me is also about clarity, so that I'm more clear. I have a clear picture on the investment journey. Now, remember just now when I said my investment approach is top-down approach, right? So first thing in my dashboard I always has is the macro trends spotter. So what I actually do is basically I put in some key indicators, key economic indicators, for me to filter it whether the current economic standpoint, where does the economic strength. Okay, but don't look at my data here. It's because this is just the template. Okay, this is not the actual macroeconomy right now. Okay, this is not actual one. So why I do that is because I wanted to spot whether our current economic trend is favor for what sector, is favor for what industry or sector, or is it a good time for me to invest in the stock market after all, right? So this is something that I'll always input, and I do to tell me what the economy is currently standing at. Okay, and all right, and this is just also where I filter all the noises, because there are too many economic data happen. There are too many economic data. Like for example, today I believe we are waiting for the Fed, the US, the Fed, to decide on their interest rate decision. Okay, because we have a US president asking for rate cut, but we have the Fed chairman Jerome Powell just mentioned that he might not wanted to cut rate. So let's just wait for the decision. All right. This week they're going to announce this week. All right. So first thing first, I have my dashboard to understand where does the macroeconomic standpoint. And secondly, I will do a stock tracker. Okay. So what does it mean? I screen using the tools that I mentioned just now. After that, I put them into a watch list. I do a comparison. Okay. And I have another dashboard where I put down all the financial data of the company, but that's too complicated. That's why I didn't want to show you here, because yeah, that one is very, very complicated and complex, because I compile all the 5 to 10 years financial data of the company for me to study on the key ratios, the trend, and all that. So that is my own personal dashboard, but it's too chunky here, so I don't want to show you. Just to let you know, if you have a stock tracker, it's good enough for you to act it as a dashboard, look at the data, and then most importantly, study it. Okay, study your data. That is the most important thing, right? So before I end today's sharing, I just want to share with you is that why data analytics is very important, because consistency will always beat prediction. Okay, don't believe in prediction. Always have data-driven consistency in your decision making, especially in investment decision. And system will beat your emotional, because system has no emotion. They only have facts. All right, so they will beat your emotion. So by combining macroeconomics together with the financial data into your own dashboard, is going to make your life easier, and also make your investment decision easier, more logical, okay, not emotional. So that's very important. So I believe my today's sharing has covered all that in a very simple way for you to understand why data analytics is important, and then what are the key information or key financial indicators that we are looking at, and by giving you the case study of the OPR rate cut and your answer to me and your response to me on the REITs, I believe that's good enough to showcase that you guys have the knowledge, to how to interpret or how to analyze the data and the information, and to make it into a better use. That means after you know the top two, what are the third thing? Study and research on the stock, which is not covered today here by me, but I believe in the Bursa webinars, they have a lot more educators. And if you are smart enough, you can always look back to our previous live together with Live Champ. I believe I also did another sessions on how do we do value investing or fundamental analysis. Can't remember, is it this year, last year, or the year before? Okay, because I've been in Bursa webinar for quite some long time. But you can always look back on that. My strategy haven't changed since 5 years, 6 years ago. So my strategy is still the same. My investment journey is quite boring, because I always use back the same thing. The dashboard, how to spot the macro, how are we going to study the fundamental of the company, how are we going to spot whether there is a high quality undervalued stock. These are simple things, but I believe consistency will always beat the prediction and also beat the markets, right? So with that, thank you everyone for your time. I believe we can move on to our Q&A sessions. If you have more questions for me, please feel free to put it in the Q&A sessions. Thank you very much.
Thank you so much, George, for doing this sharing. So if any question to ask our speaker, please write them at the Q&A box. So the first question I see on my screen is asked by Fairuz Ibrahim. So his question is, how do we differentiate between analytics and technical analysis?
Okay. Thank you, Fairuz, for your question. Data analytics is more towards fundamental analysis, and it is slightly different from technical analysis, because in technical analysis we are looking at the price, the historical price movement of the company, and we often don't look at the fundamental perspective of the company. For example, when the stock price drop, okay, if you look at the chart, right, when the share price drop, we don't usually, for technical analysis guy, they don't usually go and study, hey, why this particular red candle there. They don't particularly go and study it, but they look at the pattern. Right now, this is something different from we doing data analytics for fundamental analysis, because in fundamental analysis we don't really bother about the the noises in the share prices, because for us, whether they are undervalued or fairly valued or they are overvalued is mostly depends on their price, their performance, their future growth. And how are we going to find out their future growth, their fundamental, is through data analysis on the financial metrics, the economic data that I mentioned in the earlier slides. Right? So I think this is very important. And these are the key points that distinguish between technical analysis and data analytics in fundamental investment. I believe I have answered your question, Fairuz.
So the next question is asked by Annie. Have you experienced shock despite the data are very healthy and very good, but something happened and the share price crashed drastically and stayed low for a long time?
Yes, Annie. As an investor for more than 12 years, my answer is yes, I've experienced that. But that's also important, when we face these kind of mistakes, right? That's why I mentioned in the earlier slides, I think early in my presentation today, I did mention that don't only look at data, because after we have all the data, it's only helping us to filter it down to 3 to 5 stocks or 5 to 7 stocks. And what we need to do next is basically on research analysis. Now, when we talk about research, it's not always about numbers. Okay, we study the companies, not always about numbers. It's also about the market trend. It's also about the management of the company, whether they are good, and also about the business model itself. Now, business model is not something we can study through data, because data is facts, but business model is how creative this company can be in, or how innovative this company can be, to drive more sales or drive more numbers in the top line, bottom line for the companies. So this is very important. And let me share with you one of the mistake I did back in, I think 7 years ago or 8 years ago, when I invested in one of the listed company in Malaysia. Fundamentally, they are not good. Okay, fundamentally, they are not very good. But that time I also didn't really go down to study on the data lah, to be honest. So what's the key point that trigger me to invest into that stock is basically the future growth of the company. Okay, we listen to the management share about their future growth. They share about they are, by the way, they are the world number one. Okay, in their industry. I wouldn't name the industry, I wouldn't name the company, but they are the number one. So with the number one status in the world, when the company say we are going to become better, I buy into the story of the directors. And I didn't really go and study on the data. I don't really study on the business model itself. And after 3 years, I sold it off. But when at the moment that I invested into it, I know for sure this investment is not going to make money anyway, because every quarter result, the performance just give us a headache, because every quarter they just drop and drop. So from there, we understand that by studying at the data is very important at the very beginning stage. And also after we have the study the data, the second thing is to study the company and to do the research on that. And that cannot be helped by data alone. We need to also study on the business model, trend, the management, and the future growth of the company. So this is very important. So to me, you need to understand and master both. Okay, data analytics and also fundamental analysis for you to excel in this value investing, right?
All right. The next question is asked by Ching On. So, do you use AI to do analysis recently? The market now have been very volatile lately. So that's his question.
I don't use AI to do my analysis. Mainly because two things. Okay, 2 to 3 things lah. Firstly, I don't use AI is because I already have a set of a dashboard for me how do I do analysis or research on the company. That's why I don't really use AI to tell me how to study. And secondly, I don't really believe in AI, especially when it comes to market research, because I'm not sure whether you have experienced before where ChatGPT or the other AI lah, Google Gemini and whatnot, or DeepSeek, for example, the result that they give you, they just pluck from the sky. You see, they don't really have the answer, but they pluck from the sky. So I have experienced that. I try lah, because when people always talk about AI. So at the beginning of the time, I actually really go and try to use AI to do research for myself. And then I found out the AI really cannot and a hard one. So I just rely and focus back using my own investment research kind of methods. And for me, it's very easy because I have been researching and also doing value investing for more than 6 to 7 years. So for me, this is very easy to research on a company. Maybe for you guys, maybe you are beginners. Maybe you need to take 1 week or 2 weeks to study a company. For me, maybe I just need 1 day, for me to completely study a company and do a research, do a valuation on it. So it depends on how experienced you are in that. So for me, I don't really use AI. Yeah. So I also not encourage you to use AI anyway, because it is also a good skill set that you know how to research on the industry and also on the stock company itself. So I won't encourage or recommend you to use AI. Instead, I would say go and study how to have a proper framework on research on a company or value investing, and then master it so that you have this kind of skill set, and I can share with you, not many people know how to do research on stock or on value investing or fundamental analysis. If you mastered it, come on, you can share it with your friends. Just ask them, hey, just treat me some hot pot, treat me some mama, every month. So I teach you how to do fundamental analysis. You see, you can earn free lunch or free dinner. Wouldn't that be fantastic, right?
All right. The next question is by David. Is seasonal or cyclical data tend to repeat or can be used to project the next data decision?
Okay. Thank you, David. A good question. First and foremost, what are the seasonal or cyclical data you are referring to? Maybe okay. If you are talking about the industry data, for example, oil and gas company, all this, right? Maybe they are seasonal time of the day okay. Let me give you retail sales number. Okay, retail sales number can be cyclical, right? If you compare US, if you compare Malaysia, you will always see retail sales is a cyclical or seasonal data. And yes, that can be used to predict the futures data as well. Because for example, in US, in their Q4 or Q1, you often see the retail sales is going to be good because they have, the end of season sales, they have the Christmas sales and all that. So Q4, the numbers always or high likely to be better than Q3. All right. So now this is the seasonal or cyclical. If you are asking about that, I would say yes on the macro view. It is this important because that is also one of the indicator for us to view is the economy is doing good or the economy is not doing very well, because retail sales is also one of the key important indicators. Now, but if you, let's say you are referring to cyclical data in stocks or in industry, let me think what are the cyclical data that is in it. I would say, okay, I can't remember is there any cyclical data when it comes to industry, but let's say the industry itself is cyclical. For example, oil and gas industry, for example, consumer staples. What else is cyclical? Properties for me, I think is also, but not that cyclical because their cycle is quite long. What else is cyclical? Plantation, for example, plantation. Yes, metals plantation. Yes, these are cyclical industry. I wouldn't touch cyclical industry in the first place. That's why I wouldn't study their data anyway. Because for me, yes, these are cyclical industry. I won't want to, have my investment portfolio going roller coaster with their cycle. So I don't invest in this kind of industry. Tourism and hospitality, I wouldn't say tourism and hospitality is cyclical, because for Malaysia, we actually focusing a lot on tourism, and we wouldn't say tourism is cyclical because if COVID didn't hit Malaysia, I would say our tourism will be always on rising. Okay, because ASEAN is some good country for China and for foreigners to come in. So I wouldn't say tourism is cyclical, but if you're talking about a retail REITs, like that I mentioned just now, some of the malls, then we will not use cyclical or the seasonal point of view to view them. I would say you need to understand the industry more, because we have more. If we have a lot of new malls coming, then it might be bad for them. And it is not cyclical anyway. It is about the business industry and how the sector is, reacting to the industry. Yeah.
All right. The next question is, an analyst reports on stocks or sectors, industries reliable enough?
This is a very good question. I just have a discussion with a Remisier friend last week on this topic itself. I am a person who like to read a lot of the research reports, published and also issued by the investment banks, brokers, securities firm. Why am I doing that? It's because research is very hard for a beginner or for a retail investor, because we don't know where are the sources to get it, right? And then who are the person that have all the resources? They have Bloomberg Terminus. They have a research team to do the groundworks. Who? The research team from the brokers law, from the investment banks law. So we get data or information from their research report. But bear in mind, don't simply take their research and use it. Okay, you can take their data, but don't take their research. You get what I mean? Or don't take their recommendation, bulat, but you can take the research that they have done, because whatever been done, they must give you the supporting. As a research report, they cannot quote something from the sky. They need to quote something from a credible sources. So get that data, come back, do your own research, and then from there make your own investment decision. Okay, don't blindly follow the research report lah. But it is very important. So I always urge people, if you have chance, go to MyBursa. Okay, MyBursa is a place where you can get a lot of research report gathered, from the others brokers, investment banks. Go there, take the research report, come back, compile it, look at what are the angle or what are the research that they have done, put it back and make your own investment decision. that will make your life easier. Tell me, believe me, when I say easier, it's much easier for you to do research.
All right. So the next question is, so how many stocks should one keep in our watch list so that we can manage it well on a sustainable basis?
Well, I would say 5 to 10. I wouldn't keep more than that because I have no, I don't have a lot of time to study on it. So I would always keep 5 to 10. But you need to always keep researching because the macroeconomy is dynamic. So whenever things change, then you need to change your industry as well. But always look for some defensive or some some growth company, so that first thing, the trend wouldn't change that frequent. Then secondly, you don't need to study that much. You only need to, when you do the first cover or the research on the company, the next thing you need to do is only to always follow up on their quarter result. So for me, there's not much of work to do. 5 to 10 would be a good watch list for you to start with, I would say.
All right. So the next question is by Eugene. What is the hardest thing to do in all your 12 years of investing experience?
Wow, you're asking for my journey, Eugene. Thank you very much. Let me also share with you my journey of this entire 12 years. I started investing in stock market since high school. All right. So I started by studying the newspaper. I don't know what is fundamental analysis. I don't know what is technical analysis. And moving forwards, when I went into university, I started to learn about technical analysis. I started to learn more about value investing and also fundamental analysis. And I choose fundamental analysis and value investing as my investment strategy. The only reason is because I don't like technical analysis because it's too volatile for me, and I need to always monitor the market, which I don't like it. So I choose value investing, and for me, I'm the person who like to do research a lot. So this is something that I always love to. So what is the hardest thing in throughout these 12 years of investment journey? I would say you need to be able to cope with boredom, because as a value investor, you don't trade as often as traders. Maybe 1 year you only invest in 1 to 2 stocks, then that's it. So boring strike, because when you look at all your friends who invest in stock market, they will say, wow, this stock is good, they start to invest. That stock is good, they go and invest. Then for me, I was like, why you make so many actions and then you lost in this trade, you lost in that trade, right? So for me, I would say boring is the hardest thing for us to conquer with. But if you're a good value investor, then you need to always be able to cope with boredom. So I would say that's the hardest thing. But if you can cope with it good enough, then you will be a very good value investor. I hope that that is the answer that you are looking for, Eugene.
All right. So I think that's all the time we have for Q&A with our speaker today, George. So thank you so much, George, for sharing us this topic about how do you use data analytics to make informed investment decision.
Thank you, Shane, and thank you everyone for your time.